Let's get the details now on Saudi Aramco, because this is a company, in terms of the oil majors, of course, firmly in focus for us. It has been challenged as well as underperformed the rest of the market, given that the government there, of course, has imposed these cuts on the company. Aramco, second quarter net income coming in at 106.16 billion riyals, a little softer than the estimates in terms of the second quarter, and it expects to declare a total dividend of $124 billion in 2024. Total revenue for the second quarter coming in above the estimates. So the second quarter total revenue above the estimates, 470 billion riyals. The estimates have been for 421 billion riyals. Let's get more details on the earnings story then when it comes to Saudi Aramco, and bring in Bloomberg Horizons Middle East and Africa anchor Joumanna Bercetche with the details. Joumanna, your reaction, what are you taking from these numbers coming from a stock, of course, an oil major that has underperformed many of its competitors in the US and Europe?
Yeah, well, instant reaction is that we are getting numbers pretty much in line with expectations, so not veering away from what analysts had penciled into today. And it's broadly a reflection of what's been happening to the oil sector as a whole. One of the takeaways from the earnings season is that those upstream numbers, the numbers coming from overall oil production, have actually surprised to the upside, because there is benchmark pricing power, and that has come through from many of the other oil companies that have reported, including the likes of Chevron, Exxon, for example. Some of the weakness, however, does appear to be apparent on downstream. Again, and this is a universal theme that we're seeing in the space, refining margins are coming under a lot of pressure here. And so putting that all together, it seems as though from Aramco's perspective, some of the strength on upstream has offset some of the downside pressure that is coming through from a downstream perspective. But it is interesting to hear some of the commentary that they've come out with today, saying that they are confident in medium and long-term demand growth forecasts. Why is that important? Because you'll remember that, of course, the Saudi government has a 97% ownership in Aramco. And so when OPEC Plus come out with these decisions to pull back or to keep production off the market, it is Saudi Arabia that's driving those decisions. And invariably, that's going to be Aramco hitting the production outlook for Aramco. And so the fact that their commentary is positive about the outlook perhaps should provide a bit of support to investors' perceptions here, and that maybe there is room for them to start increasing their own production in coming quarters.
Yeah, we have to wonder what they're seeing in the key Chinese market. We look, of course, at concerns about the growth picture in the US as well. And you're absolutely right to point to the softness downstream in terms of the squeeze on refining margins. When it comes to OPEC Plus and its allies then, Russia, of course, part of that mix, what is your sense, Joumanna, in terms of how the story, how the narrative is likely to adjust in the coming months ahead for the cartel, and the role that Saudi Aramco is playing within that decision-making?
Yeah, so when you think about the Aramco stock, there are two things that you need to consider. The first, of course, is it is the largest oil company in the world, but it is still 97% owned by the Saudi state, and therefore will be subject to the variations in OPEC Plus production. And so if you are of the view that it's going to be difficult for OPEC Plus to put barrels back to the market again in the fourth quarter, then you will have a somewhat downbeat view of Aramco's own production profile. The second element to consider is the dividend payout. So out of all of the oil majors out there, Aramco is known for having the most generous dividend yield of around 7%. And what analysts are saying is that it's going to be difficult for them to continue paying out these dividends. According to Bloomberg Intelligence, the dividend payout now actually is higher than the free cash flow that Aramco is generating, putting them in a net negative cash position. Of course, that is not sustainable. They'll have to take on more debt if they want to keep paying out these very healthy dividends. And so when you look out to the future, two things need to be on your mind. Number one, can Aramco increase production? Number two, can they continue paying out these dividends? And if the answer is probably not, or your assessment is bleak, then you would have a more bleak assessment of where the stock is going. And that explains some of its underperformance this year, Tom. It is down almost 19% on the year when most oil majors are up almost double digits.